Imagine waking up tomorrow to news so seismic that the value of a currency you've been tracking for years has fundamentally, and irrevocably, shifted overnight. What if I told you that the gears for such an event are not just turning, but that a critical certification has just been placed into the machine, one that many analysts are calling the most significant development in over a decade? The question on everyone's mind is stark and simple: has the revaluation trigger finally been pulled for the Iraqi dinar? Welcome, everyone, to a critical update that cuts through the speculation and dives deep into the hard facts emerging from Iraq's central bank. For years, the journey of the Iraqi dinar has been a marathon of patience, filled with geopolitical hurdles, internal economic struggles, and a global financial community watching with a mix of skepticism and hope. The term RV, or revaluation, has become a beacon for investors, symbolizing a future where Iraq's vast oil wealth and economic potential are finally reflected in a robust, internationally recognized currency value. But the path has never been straightforward. However, the landscape is changing, and changing fast. The recent certification by the Central Bank of Iraq, a move that has flown somewhat under the radar in mainstream financial news, represents a cornerstone event in this long-running saga. This isn't just another procedural update or a minor policy shift. This certification is fundamentally about compliance, transparency, and integration with the global financial system. For any currency to gain strength and stability on the world stage, it must prove itself to be trustworthy, its banking systems must be seen as transparent, and its financial governance must meet international standards. This is precisely what this CBI certification is designed to achieve. It's a signal, a loud and clear one, to institutions like the International Monetary Fund and the World Bank, that Iraq is serious about shedding the shadows of its past and operating with the financial rigor of a modern state. Think of it as a final exam for the country's financial infrastructure. For decades, the Iraqi dinar's value has been suppressed not just by conflict, but by a lack of trust. International banks were hesitant, foreign investment was cautious, and the mechanisms for clean, traceable transactions were not fully in place. This certification process tackles that problem at its root. It involves a top-to-bottom audit of the banking sector, the implementation of anti-money laundering protocols that meet global benchmarks, and a demonstrable commitment to fighting corruption within its financial pipelines. When a central bank undergoes and passes such a rigorous review, it isn't just getting a piece of paper, it is receiving a key. A key that unlocks doors that have been firmly shut. It allows for smoother trade financing, it makes Iraqi assets more palatable to foreign institutional investors, and it begins to strip away the risk premium that has been baked into the dinar's low exchange rate for so long. This is the foundational work that absolutely must happen before any talk of a significant revaluation can be considered credible. Without this bedrock of trust, any sudden increase in value would be unstable and likely short-lived, vulnerable to the same old pressures of illicit financial flows and a lack of international confidence. What we are witnessing, therefore, is not the revaluation event itself, but the pulling of the trigger on the prerequisites that make a revaluation possible, sustainable, and real. This is the ignition sequence. The countdown has genuinely begun, not based on rumor, but on a verifiable, concrete step taken by the highest financial authority in the nation of Iraq. The central bank has made its move. The certification is its declaration of readiness. So, what does this mean for the actual IQD rate you see on the screen? Let's move from the theoretical to the practical and explore the direct cause and effect relationship between this certification and the future valuation of the dinar. The immediate impact might not be a dramatic spike on the forex charts, and it's crucial to understand why. The financial world moves on two levels, the structural and the speculative. This certification is a structural game changer. It works slowly but powerfully beneath the surface, altering the very fundamentals upon which the currency's value is calculated. Think of Iraq's economy as a company. For years, it was a company with incredible assets, massive oil reserves, a young population, and strategic geography, but with terrible accounting, poor management, and a reputation for instability. No serious investor would pay top dollar for a share in that company, no matter how good the assets were. The CBI certification is the equivalent of that company hiring a world-class CEO and auditor, publishing transparent financial reports, and cleaning up its corporate governance. Suddenly, the same assets look infinitely more valuable because the risk of losing your investment has plummeted. This is the process now underway for the Iraqi dinar. The certification directly impacts the IQD rate by systematically dismantling the risk discount that has been applied to it. As international banks gain confidence in the CBI's oversight, they will be more willing to hold dinar in reserve, to process larger transactions, and to offer more competitive exchange rates. This increased demand and reduced friction create natural, organic upward pressure on the currency's value. Furthermore, this development must be viewed in the context of the 2025 currency update and Iraq's broader economic vision. The government's 2025 budget is one of the most ambitious in its history, focusing heavily on massive infrastructure projects and economic diversification away from sole reliance on oil. These projects require foreign expertise, foreign equipment, and foreign investment. No major international corporation will pour billions into building a power plant or a transportation network if they cannot reliably and transparently move money in and out of the country. The new CBI certification provides that assurance. It is the financial green light for the 2025 development boom. As these projects get underway, they will generate a flood of hard currency into Iraq and create a thriving non-oil economy, which in turn strengthens the dinar from within. This creates a powerful virtuous cycle. A stronger, more transparent banking system attracts investment, which fuels economic growth, which further strengthens the currency and the banking system. This is the exact opposite of the vicious cycle of instability and devaluation that Iraq has experienced in the past. The signals from Iraq's financial sector are now aligning to create a coherent picture of intentional, managed growth. This isn't a haphazard or accidental occurrence. The CBI, under significant pressure and guidance from international bodies, has been working towards this milestone for years. The lifting of dollar transfer restrictions earlier was a precursor, a test of the new systems. This certification is the culmination. It tells the world that the Iraqi financial system is now, for all intents and purposes, open for business on a global scale. The direct impact on the IQD rate will therefore be a story of gradual strengthening, likely in a series of stepped appreciations rather than a single, explosive event. The central bank will want to manage this process carefully to avoid shocking the local economy, but the direction of travel is now unequivocally, and structurally, pointing upwards. Now, let's talk about what this means for you, the investor and observer who has navigated a sea of information, hype, and uncertainty. With this foundational shift now confirmed, how should we calibrate our expectations for the Dinar RV, and what are the expert indicators we should be watching in the coming weeks and months? The first and most important takeaway is that the conversation has evolved from if to when and how. The if was always dependent on Iraq achieving precisely this kind of financial legitimacy. Now that this box is being ticked, the speculation can move to a more serious, data-driven plane. The experts who are closely monitoring this situation are no longer just looking for vague political announcements, they are scrutinizing very specific metrics. The first and most immediate indicator will be the spreads in the currency auction. Watch for a consistent narrowing of the difference between the official CBI rate and the market rate. As confidence grows, these two numbers should begin to converge, a clear sign of stability and reduced arbitrage opportunities. The second key indicator is the volume of foreign direct investment announcements, particularly in non-oil sectors. When you start seeing press releases from European or Asian conglomerates finalizing major deals in Iraqi construction, agriculture, or telecommunications, know that their due diligence teams have given the all-clear on the new financial environment. This is real-world validation of the CBI's progress. A third critical signpost will be any official statements from the International Monetary Fund regarding Iraq's Article 4 consultations. Positive language from the IMF about Iraq's financial reforms and monetary policy will be a massive vote of confidence, potentially triggering a new wave of institutional interest. This is the 2025 currency update landscape in action. It's a mosaic of interconnected events, and this certification is the central piece that gives the rest of the picture its meaning. It's also vital to manage expectations regarding the trigger. A revaluation in the modern global economy is rarely a single, dramatic flip of a switch. It is far more likely to be a managed float or a series of controlled appreciation sanctioned by the CBI. The goal for Iraq is not a speculative spike but a stable, strong currency that facilitates long-term economic growth. They have seen the damage that volatility can cause, and their primary objective will be to avoid it. Therefore, the most realistic and healthy expectation is for a steady, evidence-backed climb in value, driven by these improving fundamentals. The wild, overnight millionaire stories are the stuff of fantasy. The reality is a solid, promising investment thesis based on a nation's genuine economic rebirth. The patience you have exercised until now needs to be coupled with a new, sharpened focus. The noise will continue, but your lens must be clear. Focus on the data points that matter, the auction results, the investment news, and the international financial endorsements. This journey was never about a quick lottery ticket,